Hi, everybody. This is Dr. Christy Taylor. I'm back with another episode of the Career Coach RX podcast. This is part of our Black History Month celebration, our podcast Blitz, where we are celebrating Black professionals and entrepreneurs. And today I'm so excited. My second guest for today is Mrs. Debbie Lloyd Morris. She is the founder of WORxK Solutions LLC. And Debbie and I actually have a great history. We've known each other. We grew up together, right? And so before I hand it over to you to introduce yourself, I just want to give a special shout out to two of our biggest haters. I would like to give a shout out to Karen and Mike, who, if you're tuning in or you listen to this at a later date, just know that the older children, we're always the family managers and we'll always be in charge no matter how old we get. Right, Debbie?
Period.
All right. So I'm going to hand it over to Debbie. She's going to tell us a little bit about herself, her business, what inspired her to do the work that she does. And we're going to have a great conversation today about not only the inspiration behind your career, but we're going to transition that into just a general discussion about things that we can do to help and support our community. And part of that discussion is focused on gentrification and how do we advance home ownership in minority communities. So Debbie, you can take it from here. Tell us a little bit about yourself and how did you start off in this career?
First of all, I just want to say thank you, Dr. Christy Taylor, for having me on this platform. I definitely enjoy what I do. It's always great to see other people that, you kind of grew up with, see them succeed. And I love sitting back watching. So as she said, my name is Debbie Morris. I am a mortgage broker. My company is WORxK Solutions. I have basically a banking and finance background of about 21 years now. I started out at a local bank, and I've been on the mortgage side for about 7 years now. And I mean, I absolutely love what I do. My goal was always, even while I was at that bank, my goal was always to be a loan officer. Once I started kind of researching into the mortgage side or the actual real estate side, that basically became my goal. I always wanted to be in the mortgage department. So, I mean, I did a lot of behind the scenes work as far as, doing real estate loans and kind of processing those in the back offices of the bank. Ended up marrying a guy that became a real estate agent. So, everything just kind of fell into place. And once I learned everything that I needed to know from that bank, I decided to, go ahead and go get my license and go full-fledged into the mortgage industry. So, after, working and kind of going back and forth with some of the other local companies in the area, I decided to strike out on my own and, open my own business. So, like I said, I love what I do. It's very rewarding for me. To me, homeownership in our community is vital. There's so many important or so many things that it affects. I mean, that of course, that's why we're here today. So homeownership is absolutely vital.
So, you just kind of raised an important point just out of my own curiosity. I always thought, actually, just over the years, I've had an opportunity to watch, I left Mississippi 20 plus years ago, but, we have always kept in contact. And I've had an opportunity to watch you on social media. I was just always under the assumption, and just in general, for my own knowledge, and for people who are out there who might be interested in this career field, you started off as a loan officer in the bank. I had assumed that you were a real estate agent. So what was your career path? Like, tell me, what was your career path when you talk about, because I made the assumption that you were a real estate agent and then you went over to be a mortgage loan officer. I thought you kind of had a side hustle or something that you turned into that. So, educate us on that path. Cause I know in Florida, typically, if I'm correct, don't, correct me if I'm wrong. My friends, they've had to be one of my friends, she opened a brokerage agency. She had to open a brokerage. She had to be a licensed realtor for 5 years. So is that the same thing that you're doing right now? And is the requirements different?
It's different. And a lot of people now think that I'm an agent. I'm not an agent. I'm a mortgage broker. So basically you have real estate agents and then you have real estate brokers. The real estate agents work for the brokers. Me on the mortgage side, I only deal with the loans. So I don't show houses or anything like that. I basically finance those properties. So when I came from the bank, like I said, working and kind of processing those loans, in the back office, going out to the mortgage side. Basically, I was in the background. Now I'm, basically front face, and I'm talking to customers face to face, one on one. Like I said, I just do the financing portion of it. So, I mean, the same way we have mortgage loan officers, which I'm a licensed mortgage loan officer. I became a broker when I opened my own business.
Okay.
So,
Man, I want to talk a little bit about, we got so much conversation to fit into this 35 minute window, but what was it like? Because, we grew up in the South, and it's kind of like, hey, you go to school, you get your good job, you graduate high school, you need to go to college, go out and get you a good job, and you stay in that job for 20, 30 years until you retire, right? So here you was working, you had a great job, you were working at the bank as a mortgage officer, loan officer, and then you said, okay, I'm going to break out and I'm going to open my own business. What's the name of that business again? Let's make sure we plug away.
WORxK Mortgage Solutions.
All right. And it's attached there in the comments, guys. So all of our social media platforms where you'll be able to access this interview, you'll be able to follow her on all her social media platforms. When you decided to break away and go into your own business, what has that journey been like for you, and what have you been learning as a part of that process?
That journey was crazy. It takes a lot to step out and say, I'm going to do this on my own, to be honest. I worked at the bank for 15 years before I even moved to try to pursue, a career in mortgages. So once I actually started in mortgages, of course, I was working under somebody because the requirements are that you have to work, I think it's 2 years under a licensed mortgage lender before you can actually, strike out on your own and become a broker. So, I put that time in, and I took that time to learn what I needed to know in order to kind of do this on my own. And I'm gonna be honest, when I first started, I did not have the goal of opening my own business. That wasn't the goal. My goal was to get in, learn as much as I could, and continue to advance. Even when I was at the bank, it was always, okay, yes, I'm at this level. Let's say starting out as a teller. I'm a teller. What's the next step? Well, the next step is head teller. Okay, after your head teller, what's after that? You go CSR or lending assistant or, supervising the loan department. My goal was always to step up no matter what I did. So it was either a lateral move or it was a step up. It was never a step back. So even when I got to the mortgage side, I kept that same mind of, okay, what can I do after this? I've learned what I feel like I need to learn. And I, by no means, will I say that I know all there is to know, but I learned as much as I could to prepare me to try to strike out for the next level. And naturally, the next level was to kind of open my own business. So.
Right, because people will look at us and say, "Oh, you are thriving." But if you understood the behind the scenes headache, we were just talking about that before we came on. Behind the scenes headache of launching and trying to manage a business. And in my case, I've launched a couple of businesses, and I've dealt with, and I would say though, each time I've learned from, what some would see as failure. I just say it's tuition for success, right?
Right.
But even in the middle of launching this business, I'm in the process of rebranding, redoing. And that's, as a business owner, you have to always reinvent yourself. Right. And so, you have this great passion for helping our community. And we talk about accessible housing. And so we've talked about all of the portions that we need to talk about. So I can say, hey, this is a career podcast. But now we're going to talk about the social impact portion of the podcast, right? Which is why I wanted you on today to not only talk about your career path, but this passion that you have for making sure that housing is accessible and affordable in our communities. And I want to talk about the impact of gentrification. So I'm going to say this in non-politically correct ways, right? Because we both got jobs, we want to keep them, and we want to make sure we stay to our community. But I'm going to tell you, in the community that we grew up in, once upon a time, 25, 30 years ago, that was a very segregated community, right? And we all grew up running up and down the streets together, playing. And it was kind of like when we talk about those old Southern type of communities, like I would say across the track type, but it's like a weird thing, right? Because I remember going to school, everybody played together. It didn't matter who you were, black, white, yellow, purple. We all played together at school. Right. But when we went home in the evening time, there was such segregation. Like, we went to our communities, which was Pearson and Greenfield. Am I missing one of the Black communities in Pierce and Greenfield. Those were the two main communities. Then in Brandon, it was Shady Lane, Ponderosa, Taylorsville, right? We would go home to our communities, and that's where we were. And then we get up, go back to school again. And now here we are, fast forward 25, 30 years later, right? And a lot of that is changing. And I think that change is good, right? Because the world we live in a more modern world. But a lot of things and implications can come with gentrification. So now if you're driving through our community, it's in modern day, our community, you see them building new houses, places that used to be woods per se. Now those are new subdivisions. I mean, even on like our main street to get out back and forth out of the neighborhood, I see them knocking down trees. They're building. It's just changing, right? And so I wanted to like really talk about, what is your perspective on this change that you see happening within not just our community. This is just a subset of what I'm talking about. But when we talk about gentrification in general, I wanted to learn about your perspective on that and how do you see it as good or bad, right?
Right. So gentrification can be, well, let's start here. Gentrification, by definition, it is change. It is middle class or wealthier families moving into an area. The downside to gentrification is that it usually causes a rise in prices, a rise in costs, and it starts to kind of push the community that was there out. So that's the negative part of gentrification. Yes, we like to see change. We like to see, the neighborhood being better or improving. However, the negative implications, like you said, the kind of pushing of those people that have been in that community out, or that's the part that kind of makes it not so okay. Revitalization is important. And that's really why I harp on homeownership, because the more we own, the more of the block that we buy back, the more that we have control over the land and, the existing houses, or revitalizing our own neighborhood. The goal is to revitalize before gentrification happens. The goal is to make sure that everything in that neighborhood is thriving. Everything is, up to par. We're not violating code so that, the city can come in and fine you or put liens on your house because, everything's run down. Things like that. So, when we get into, just kind of watching the change, there's a lot that can be done prior to this happening that, can possibly not necessarily completely prevent. Because I don't know. Gentrification it happens everywhere. So it's going to be kind of difficult to completely stop it. However, like I said, we have to be a little bit more prepared in controlling the direction of it. Where a lot of times we're caught on the wrong side of the gentrification, which is the problem. I feel like if we get ahead of it, if we try to, unify and, if everybody's on the same page and saying, hey, we got to keep our community as our community, then, the unification is what is going to be key.
Well, I had my statistics ready for today, but then, in the middle of you talking, I pulled up some more stuff because I wanted to talk about that. Like, I have some family that lives in Chicago, and if you guys remember the show Good Times, that neighborhood when it came on, they would show that film. And now if you go to that area of Chicago, that is all high-rise apartments and expensive. It's no longer what it is. So it's like when we talk about this from a conceptual standpoint, right? It's like some things can be good, but it's like because we want to live in safe communities. We want to, so it's not about like you taking everything from us. I remember growing up though, and I don't know if you remember this, like we used to have in our community yard of the month, and like people took so much pride in competing for yard of the month. It's not like the houses here were fancy at all or anything like that, but it was just like the pride that people took in community. Let me read you a couple of statistics because I pulled up statistics on home ownership in Black communities, minority communities. But then while you were talking, I was like, I want to delve into this thing about gentrification because some people see it as all bad. We're not here to take a stance on it, right? In terms of how you see it as good or bad. We're taking a stance on what you could be doing to prepare yourself for home ownership and the importance of unification as a community, right? So whether you see it as a good or bad thing, I remember watching what's the name of that movie? Jason's Lyric. And I remember growing up, they had This Is It Soul Food. And I didn't realize it was a real thing, right? Until I went to Houston, and I remember that girl when she was in that movie, she was like, "Welcome to This Is It." And that when somebody told me that was a real restaurant, I remember going to Houston, was like, I gotta try it. So when I lived in Texas, I went to This Is It Soul Food, and the food was amazing. I went back a few years later. I thought I was in the wrong neighborhood because it had changed so much. You know what I mean?
Yeah,
so it's just like here's a couple of statistics, right? I posted some of these in the comments, just in case people want to, follow up, or between 2000 and 2013, the percentage of Black households who own their homes decreased by 9%. Some of this stuff it needs to even be updated, because I'm assuming that even after the last crash, right? That decreased even further. Other things, gentrification. To your point, gentrification often occurs in areas historically redlined. We're going to talk about redlining a little bit and what you see, and then how can we start to help people to prepare for home ownership, learn to be united in their communities. Because again, we're business people. So, if I'm going to be honest, if I was a mortgage broker, I might have a stance on something, but I'm not going to turn down certain things because, I don't believe, this or that, right? Because all money is green. And so we have to understand that as business owners, we cater to everybody. But right. I think it's the key to what you said, right? Is the focus is on unification. I want to just read a couple of points here. Gentrification, it often occurs in areas historically redlined, contributing to the displacement and further economic disparities. Redlining, which is a discriminatory practice by which banks deny services to residents. So we talk about pricing us out of these communities. Gentrification can stem from that, right? We get priced out of our own communities, places where our families have been for generations. Area previously redlined tend to have higher concentrations of low income and minority populations. Gentrification is informally redlined neighborhoods can lead to the displacement of long-time residents. And then I just want to hit you with a couple more stats about, just home ownership. Research indicates that gentrification is associated with decreases in the percentage of Black homeowners in urban areas by as much as 10%. Black home ownership rates are lower than they were before the housing crisis, despite overall increases in home ownership everywhere. So we're seeing right now that the market is going crazy. I'm hearing that it might come back down, but I'm in DC. I do well as a middle class person, but I cannot even afford a home. The minimum that I'm going to be able to buy a home for is about $500,000, and that's not even feasible, right? And I'm a person that's like, I'm doing pretty well for myself. That's not even feasible. So now that I've given you those stats, I want you to take this conversation wherever you want it to go, right? I want to talk a little bit more. We talked a little bit about gentrification, and I want you to educate us on really what redlining is. And, and we talk about Black home ownership, minority-owned home ownership, and how we can start preparing, to better prepare ourselves when we talk about this unification efforts, right? And as individuals to be able to to have home ownership in land and all that stuff. And I also want you to kind of address like some of the things that you're seeing as a mortgage broker, because I see sometimes your Facebook posts where you're giving advice, like obviously that's coming from a place where you've seen these people showing up, they're not pre-approved. So let me give you back this platform so that you can talk about all of those things that I'm asking you to educate us on.
Yes, absolutely. And it's crazy that you say that, you being middle class, pretty well off, and still, having that issue of trying to afford a home. My husband and I were talking the other day. I think I saw a Facebook post saying that the middle class is the new lower class. Like it's crazy the shift that has happened. We've worked so hard to get to the middle class, and now we're still a step behind for some reason. And it's because the affordability is continuing to diminish. As prices increase, less and less people can actually afford to buy a home. So it's increasingly hard for those people that were still in the lower income brackets. They're still trying to catch up. We're out here putting out education and doing home buyer seminars, trying to educate the community on how to fix your credit, on how to, save up money, or how to basically do exactly what I said as far as moving in your career, whatever that is. Don't take steps down always move laterally or up, teaching them how to basically increase their income wherever they are. It's just it's a never ending cycle. It kind of feels like sometimes when, like I said, we're trying to put out the education in our generations, or maybe some generations before us. Like, I'm still seeing people that are older than me as first generation home buyers. And that's because either nobody before them owned a house, nobody, knew what it took to own. Everybody was either a renter for forever or whatever. And I think that is a huge problem when we talk about gentrification and the neighborhood kind of being priced out. Most of the people that are in the neighborhood now, a lot of them are renting. Those people that were owners, like, let's say the older generation is starting to die off.
Mm-hmm.
I feel like in our community, we don't necessarily want to talk about estate planning. We don't want to talk about end of life, what that looks like. We don't want to talk about what's going to happen to the land or the house after, grandmother or grandfather are in the nursing home and can no longer provide for themselves. What's going to happen to it? Well, a lot of times, and this is going to get into some personal business, but a lot of times the families are not on one accord to take care of it. Everybody's fighting. They want to fight over the house instead of trying to figure out how to build and how to either improve it to rent it out so that it benefits everybody. So things like that are, starting to kind of go to the wayside. If something happens, let's say grandmother dies, the house, it probably has a lien on it because grandmother was trying to survive, right? Yeah. So, she went out and got another mortgage on this house that should have been paid for a long time ago. And now all of a sudden, nobody in the family can take it over. Nobody has the good credit. Nobody has the money saved up. So you can't even buy it from the bank. So, when things like that happen, that's when we see the investors come in and scoop up these properties, and they throw a renter in it and start to price out the market.
I can tell you the number of times my mom, I've gone to the mailbox, she gets these "We Buy Ugly Houses," little cards, right? Because people are coming up in our community. It's exactly what you said. They're buying up properties in our community and then reselling it back to us, so we can't even afford it. And I will say this, because our families have been in this community for a long time. So a lot of what we have and experience, right, is passed down to us. Because back in the day, like this house that I grew up in, this house has been in my family for over 50 plus years, probably longer than that, right? Because this is what was passed down to us. But for Black people back in the day, this was like great, because they were able to come in, build a home. It didn't matter if you bought a trailer, you built the home. My grandmother, she had a trailer, and eventually she built a home here in this community. So it might not look like a lot, but it's what we had, and it came from what the hard work of folks who came here with nothing and built up something for our family. So we can't be afraid to have those conversations, because it doesn't matter what it looked like, right? It's more than what somebody else has, and is being passed down to you on legacy. So here's my question to you, David. I am a person, and I want to own a home. You say you're out here doing all of this education, right? And I'm a first-time home buyer. I want to own a home. I want to go through that process. What's the minimum credit score that I'm going to need? I mean, before I even get to you, before I even start thinking about looking for a house, what do I need to be doing?
So what you need to be doing is making sure that you're paying your bills on time. Like, easiest thing to do, make sure you're paying your bills on time. I think what people need to understand is that your credit history is what's looked at to approve you or not approve you for a loan. So if you have a history of not paying your bills on time, not paying your bills at all, you got a bunch of collections, that's what they're looking at. And think about it like this. If somebody's going to give you or loan you hundreds of thousands of dollars, and you've not even been, on the right track to pay for the cable bill, and you let it go to collections, things like that kind of pile up on your credit. We think of it as, oh, that's just a little bill that I didn't pay. But I mean, that's important. That's your history. That's your credit history. That's what you're being judged by, to figure out, okay, whether or not you're going to actually pay this home loan back.
Hey, we have a question in the comment too, David, to your point. We're being asked to kind of mention, we talk about the impact of student loans and credit to debt ratio. What impact does the student loans have on your ability to even qualify for a home?
Student loans are huge, especially if you have a huge balance. being, and I know a lot of people put those student loans on forbearance, or, put them in that where they don't have to pay them basically. But what they don't realize is that it's going to continue to collect interest. So your balance is going to continue to climb. The more you have, the worse off it is. We still have to count a portion of that, even though it has not as much as it used to be. Depending on the loan type, it's either 1% or 0.5% of your total balance towards your DTI. So basically, even though you're not making a monthly payment, once I get finished counting 1% of your total balance towards your DTI, you basically have a payment. Like, I have to give you a payment on that. Unless you have, let's say if it's a conventional loan and you have an income-based repayment plan. If your payment plan is at 0, then I can count 0. So it just kind of depends on how they're set up, the loan type that we're doing. There's a lot of different nuances that go with that. But I mean, I've seen a lot of people start to try to get them forgiven. I have a client right now that we started in December. He actually applied in December. And as of last week, they forgave his student loans completely. So like, we have nothing to count in, none of that. I told him, I was like, just get me some documentation saying that they are completely forgiven, you do not have a balance, and we're going to move on and we're going to close next month.
Now, is there a minimum? So we talked a little bit about the student loans. Shonali is asking about defaulting on loans, but I think Debbie just kind of covered that, right? Because I think one of the biggest, and you just kind of educated me, because one of the biggest things too is like, you are continuously putting those loans in forbearance and thinking, okay, I'm not having to make a payment, and then you want to go and buy a house, and here you are, even though you're not making a payment, you're saying that percentage based on that ratio and the type of loan that you're getting is going to count, right?
Right.
Let me ask you this: if I want to buy a house, is there a minimum credit score that I should have?
So there is a minimum credit score. Now, I can do down to a 500 credit score, but let me be honest with you, you do not want an interest rate at 500 credit score. You don't want the interest rate that comes with that. Typically, I would say go for 620 plus. That's going to put you in the best position. You have access to like, let's say, down payment assistance if you are either first-time home buyer or if you meet the income guidelines, things like that. Plus, so the higher your credit score, of course, the better your interest rate is going to be. So
we've talked about, this prep, managing your loans, making sure you pay your bill on time, right? Because that should be common sense. You're not paying your bills on time. Don't expect somebody to give you $500,000 for a loan when you are not even paying the light bill on time, right? Yeah. 2, you want to have some type of minimum credit score. You want to make, and 3, you want to make sure you manage those loans, right? Manage those student loans. So certainly that was a great question that you asked. What about down payment?
So down payment, depending on the type of loan that you get, I think a lot of people are still stuck on that 20% down. You don't necessarily have to have 20% down. I can do a loan with 3%, 3.5% down. And like I said, there are some loans out there, or some programs out there like USDA. That's 100% financing, so that's 0 down payment. Veteran loans, most VA clients can get in with 0 down payment.
So, listen, we've talked about, it's like, when it comes to home ownership, this has been a really great conversation so far. I want to make sure I still talk about some of those topics, though, when we circle back to one of the things that we said we were going to address too is redlining. We talked about gentrification and getting approved for homes, especially in the Black community. What's your take on redlining? Has that slowed down? Because, gentrification comes from in roots of, it really started in many communities that were redlined, right? So, so I just wanted to make sure this conversation is holistic. When we talk about some of those historic things that were happening, what's happening in modern times today? Is that still occurring?
So I think to an extent it still occurs. There are a lot more guidelines and rules against redlining, and a lot of things that we as loan officers have to follow in order to kind of make sure that does not happen. Same with the realtors. They're not allowed to legally continue to redline, but we know that with the systemic things that happen, there's always a way to kind of sneak around these guidelines and these rules. But I mean, a lot of that is pretty much diminished because of the guidelines and the rules that have been set forward, especially after like you said, the last crash. All these rules and everything that were put in, they were definitely put in place to try to help and protect the buyers, from things like that. So.
Okay, so we know it still occurs, but there have been rules in place to try to improve that, right? So right now, when we talk about home ownership and this concept of unification in our community. If you don't want people coming into your community, taking it over, right, and pricing you out of your own community, then the two things that you have to do is you need to make sure that you're unified in your perspective. There's nothing wrong with growth, because I know I'm going to want to live in a safe community. But to me, overall, when I look at our community, honestly, it's always been pretty safe. It's not the richest, right? But in our community neighborhood, it's always been safe. That's just never been an issue here in a small community like Pearl. I can understand if it's like more urbanized, right? But this community that we grew up in has always been pretty safe. So we talk about this concept of using the excuse, well, I've been redlined and all of this stuff. Well, the bottom line is we know that we are always working against systematic factors, particularly as Black people, right, in these systemic issues. So if you know that you're going to be going up against this challenge and you can't inherently change the system as a single person,
right,
then what can you do to prepare yourself to make that improvement? And part of that is taking responsibility for how you self-manage, right? And you be a person that owns the property and the land and the things in your community. I have no problem with saying that as stuff becomes available, I will buy up some land in my community in a minute, right? To make sure that stuff stays in my family. So to that point, you said things like, when we talk about self-management, you have to make sure that you got to pay your loans and managing your bills, making sure that your credit score is where it needs to be. And it doesn't have to be an inherently high credit score, right? 620 is good. And Debbie said that she can get you in there as low as 500 for a credit score. Talking about managing student loans and that debt. Shauna really asked some great questions, that debt to student loan ratio, because a lot of people think, well, I'm not going to even pay these student loans, but it counts against you. So if I'm going, Debbie, to look for a house, I did all of that, right? And I want to look for a house. What is the ideology of getting pre-approval? Because we don't want to waste the realtor's time. I know your husband, he's a realtor too, right? We don't want to waste that realtor's time. Oh, I just want to look. I just want to look at houses, right? So when you're ready to buy that house, what is it that you need to do?
So when you're ready, definitely reach out to me, of course. Call your mortgage broker. Let's discuss everything that you have going on. I have an electronic application. You can fill that application out in a few minutes on your phone, on your computer, whatever you want to do. You can upload documents. So things like we collect pay stubs, identification, taxes. File your taxes. The last 2 years of taxes, W-2s, 1099s, things like that, in order to look at your overall profile. We look at your credit, we look at your income that you have coming in. We make sure that your income is stable. Stable meaning for the last 2 years, you are a W-2 worker, you have been in the same field, or you're self-employed for at least 2 years. You've been...
If I'm self-employed, if somebody who's out there who's an entrepreneur, and if you're self-employed, how are they documenting that? Like I see people who are famous on YouTube, right? And they might want to go back, but they get denied, but they're making all this money. I'm nowhere near there. But I just want to know, like, if somebody is an entrepreneur like yourself, like, what are you doing to make sure that you maintain documentation and showing proof of income when you go apply for a house?
So make sure you're keeping up with your finances. Make sure you're keeping up with the money that's going in and the money that's going out. So profit loss statements, keeping up with all of your income. So me personally, I manage my finances through something like QuickBooks. I'm making sure that whatever expenses the business has, I'm documenting that. And I do run across a lot of people that when I ask for a profit loss statement, that are self-employed, they have no idea what that is.
Yeah, I'm horrible at this. Like, I'm horrible at that piece. I have no problems. I have to hire that out, right? And it's an expense, but when I know that when somebody's like, what's your P&L statement? I'm like, in the beginning, I'm like, I had no idea, like, what is that, right? You know what I mean? Right. And I consider myself a pretty astute person. So don't be afraid, guys. Like, if you're running a business or you need some help with something, to go out there and hire some help so you can make sure that when you get ready to go look for a house or a home. Let me let you continue, Debbie, because we were talking about, okay, I'm getting ready to look for my home. I've called Debbie of WORxK Solutions, right? And I'm assuming when they submit this application, this is to get a pre-approval.
Correct. This is to get a pre-approval. Another thing I want to say about the self-employed people, make sure you're not writing off all of your income down to zero, because whatever income you show in your tax returns, that's the income I have to use to try to get you qualified. So if you're writing everything off and you're only claiming that you're making like $3,000 for the year, sir, you don't have enough to buy a house, or ma'am. So just make sure, like, and then, like I said, we're looking at the last 2 years of income. So I have to average those last 2 years plus what you made this year alone. So, $6,000. Let's say you made 3,000 one year, 3,000 the next year. That's not enough to buy a house. That's not gonna work. So make sure whatever you're doing, it is legitimately correct, and you're not just purposefully writing everything off just so you don't have to pay taxes.
I watched the YouTube. Actually, these guys were in the real estate industry, but I learned more from that YouTube video about how to run a business than I have from any class that I've ever taken. I have to find that video and send it to you. And one of the things, that was one of the questions that popped up. And they said, okay, well, if you are writing stuff off as a business, if you know that you got to show that last 2 years, make sure that you are thinking ahead, like, okay, in 3 years, I want to buy a house. So you stop writing stuff off for that 2 or 3 year period, right, to the level right, so that you can actually show this level of substantial income. Then once you get in your home or wherever it is you want to go, and you get that permanent situation, then you can start back to doing whatever you were doing, right? Yeah, I'm glad you brought that up.
Yeah. Yeah. I try not to give out too much tax advice on that because I don't want nobody calling me to myself. Yeah. Talk to your tax professional about your taxes and how to go about writing off the business income or claiming enough income to actually move forward like that. So yes. But yeah, after we collect all the documentation, like I said, we review credit. And we have to look at everything. So we make sure that you have enough assets as far as cash to close. Do you have enough money to close? Do you have reserves? Reserves meaning, do you have money in the bank? So that will cover, let's say, 2-3 months worth of your mortgage payment in case something happens. I always, try to advise my clients to get a number one home inspection going in, because you want to know everything that's going on with this property going in when you purchase it. There are systems that are major that once you buy and once you get in could break down. Things like water heater, that's not cheap. HVAC, that's not cheap. So you got to make sure that you have enough of a cushion after you purchase your home. So this is after your closing costs. This is after your down payment. Make sure you have enough of a cushion that if something happens, you have enough to, still sustain and be able to make your mortgage payment. There's things like home warranties. So, make sure that you know what a home warranty is. That is basically an insurance type policy that will cover some of the major systems in your home. So it will, you pay a nominal fee for somebody to come out, review what's going on, and then they will fix it. They'll actually pay to get that fixed. Talk to your realtor and make sure that the seller is going to provide you a home warranty, or make sure that you know some of the companies that are around locally. Reach out to them and see how much it's going to cost for you to have that as soon as you get into your house. So that, on top of homeowners insurance, on top of, a lot of other things that are basically safeguards once you actually get in the house to kind of keep and sustain your household, moving on out. I know a lot of people say purchase, but nobody ever talks about maintenance. You have to be able to get in the house and maintain it.
That's so important. David, you have given us so much great information. So this is the Career Coach RX podcast, where we do talk about careers, but we've talked about David Lloyd Morris's, her journey through working at the bank, being a loan officer, and then transitioning to entrepreneurship, where she has spent, how many years have you owned Onyx Mortgage Solutions?
We will be 3 years old this year in a couple of months.
And we've talked about all of this great stuff, right? We've talked about, and we're really using the basis of this month to really launch that initiative, and I make this business transition with WORxK Solutions to focus more on social impact issues as a community, as a career coach, and mindset coach. I really want to bring these issues with not just our community, but all communities to the forefront, right? And so this month has really been a testament to that. This podcast episode has been so educational. Last podcast episode, we talked to Miss Ohio. This podcast episode, you have given us a short course on how to prepare for home ownership. And we've talked about, so if you're tuning in and you are from Rankin County, you're listening in from Pearl, Brandon, Michael, Karen, if you're listening in, if you're listening in to us, this has been so educational. But this is only like one part of what you do, Debbie, because we know we talk via chat all the time. And we know that we're running the back end of our businesses. And so part of what you do as a mortgage broker is that you are also hosting sessions to educate people. So I'm going to repeat a little bit about what she said earlier, but then I want to make sure, Debbie, that as we wrap up this episode, that you also spend some time plugging. I mean, you told us everything from, we talked about the gentrification and redlining, but some of that stuff as changes occur, right? The basis that what you said, Debbie, is unity. Making sure that you're doing the basic stuff to take care of yourself and your community. And part of taking care of your community means taking care of yourself. Pay your bills, take care of them student loans, manage them, save your money, right? Make sure that your credit score is in a good place. Make sure that before you go and you waste that realtor's time, that you go and get pre-qualified. It's okay to reach out to ask questions, but we're not going to go, I'm going to speak for you, Diff. We're not going to go look at 25 houses and you're not pre-qualified, right? Because time is money and money is time.
Absolutely.
So you give great advice here, but I also heard you also talking about, it's not just about the qualification piece, it's also about making sure that we are able to maintain. And so part of that, what you do as a mortgage broker, you also educate. So when it comes to education, you have been hosting workshops, and I want to make sure we give you an opportunity to plug them. Do you have any upcoming workshops or plans? Where can they find information about you? And as we wrap up today's episode, I also want to make sure that you have an opportunity to not only plug yourself, your workshops, things that you're doing, but please, where can they find you? Where can we find you on social media and learn more about and how to engage with you in your business?
Yes, absolutely. I do have a seminar coming up soon. I'm not going to give too much information. It is March the 20th. Mark that date and keep watch on my page. So as soon as that flyer is out, I will definitely give everybody information on that. Partner with a few real estate agents in the community, so to put this seminar on. So definitely do not miss it. Follow me on Facebook at Debbie Lloyd Morris. My business page is at WORxK Solutions on Facebook. I'm mainly on Facebook a whole lot. Some of that kind of flows over to Instagram, but I am mainly on Facebook. Follow my page because I do post a lot, whether it's education, whether it's homeownership tips, sometimes just being silly. But definitely follow my page because I feel like I put out a lot of information and try to put as much education back into the community as possible.
And Debbie, once you are ready to share that flyer for your March 20th event, be sure to send it to me and I'll make sure that we put it in our email blast. It has really been such a pleasure. It's almost, we chat via Facebook, message over the past 20 plus years or however long, right? But this is the first time I've had an opportunity to actually speak to you. I still have like some pictures from when we used to go over y'all house when we was little, all y'all. And so it's really a pleasure, and I'm very proud to see all of the work that you've done and all of the advancement that you have made. Guys, I want to make sure that I plug that's part of this social transition. We are not only addressing, these are just part of the topics. We've had conversations this month around, education in our communities. We've talked about maternal child health in the last podcast episode. This episode, we have talked about, home ownership, gentrification, redlining in our communities. The next episode, we're going to talk about health and wellness. And then on February 24th, guys, if you have not seen it on my page at Career Coach RX, we're going to be hosting the Black Health Summit. We got some great people coming in. I have one lady who's an author. She's been on CNN. She is a medical doctor. She's going to be talking about patient advocacy and self-advocacy in the Black community. We're going to be talking about maternal health, mental wellness. I got some great people coming on that are going to be giving feedback to support our community. And then we're going to hit it hard again in March. We're going to be talking about, we're going to be talking to women because it's Women's History Month. And we're going to be talking about, talking to a diverse group of women, and they're going to be sharing their journeys. And then I got a surprise for y'all in March too. And so, this has been a pleasure again, Debbie, to have you on the show today. This podcast episode will be available on Amazon Music, iHeartRadio. It's already going to be immediately available after this on YouTube, and it will also be available on Spotify. You can follow us, WORxK Solutions LLC. We are known in the community as Career Coach RX. The name of the business is WORxK Solutions LLC, however. But you can find us across all social media at Career Coach RX. You can find more information about the upcoming Health Summit at Career Coach RX. And don't forget, you can find Debbie's information. I posted it there in the chat as well as the statistics for you. So thank you for tuning in today. It has been a pleasure, and we look forward to seeing you on the next episode. Thank you. And thank you, Charlotte, for the questions that you had. Thank you.